Stock bubble or not? Hey everyone, it's Wolfgang. We're going to discuss the stock market. Is it currently in a bubble or not? There are differing opinions. Let's take a look, okay? Warren Buffett. From Warren Buffett, Berkshire Hathaway, the Buffett indicator, whoops, I missed a T in Buffett there. The Buffett indicator, the Wilshire 5000, all stocks divided by the U.S. gross domestic product. Right now, it's over 200%. The Buffett indicator is over 200%. Historically, according to Buffett, that means stocks are at a high valuation. This is according to Buffett. Berkshire Hathaway has the highest cash position in its history. It sold two of its big holdings, Bank of America stock and Apple Computer stock. It's got a huge cash pile. I think it's like $320 billion or something huge. But this huge cash pile, it's a little bit confusing because Buffett is retiring at the end of this year, just a couple months from now. He's retiring. So what is the motive for the stock sales? What's the motive for having such a huge cash pile? Is the intent to set up the person taking over Berkshire Hathaway, Greg Abel? Maybe. Okay, that's Warren Buffett, the Buffett indicator, large cash pile. He's retiring, so we're not sure. Jerome Powell, head of the Federal Reserve. Jerome Powell said the AI boom is real. It's not another dot-com bubble. He has pointed out that technology firms are booking legitimate profits. These are not companies like the dot-com era, which were ideas waiting for eyeballs. Jerome Powell believes this is a legitimate increase in the economy, in that part of the economy. He said that artificial intelligence is a long-term investment. It's going to be with us for a while. Data centers are getting a lot of investment, a lot of infrastructure. Power grid getting a lot of investment. That's more infrastructure. So infrastructure is the substance that something is built on, right? Infrastructure for artificial intelligence means data centers to house lots of computers with artificial intelligence computer chips, GPUs, TPUs, and so on. Power grid investments, I would include water investments too for cooling, HVAC investments for cooling. The economists are in agreement with Powell about his perspective on the artificial intelligence boom. They believe it's legitimate. It's not a flash in the pan like at the end of the 1990s when there was a big crash because people started to realize back then that a lot of tech companies did not have income. Powell has pointed out that tech firms are booking legitimate profits. Okay, so Warren Buffett, Jerome Powell, Jamie Dimon, he's the head of Bank of America, a very high-profile person in the financial industry. He said that there's like a 30% chance of a stock pullback, a big correction. Not sure when it's going to happen. So that's kind of wishy-washy. It's almost like I want to throw my hat in the ring of people who think the stock market's at a high valuation. Doesn't mean a lot. 30% chance of a pullback at some point in the future. Pretty indefinite. Okay, high stock valuations. He pointed out that there's a dicey political and a geopolitical environment, which is true. There's a lot of conflict throughout the world in various different intensities. He also said that Bitcoin is good. And I put question marks there because historically, Dimon has not been a big fan of Bitcoin. All of a sudden, he's come on the side of Bitcoin. I find that very odd. I find that very odd. If you look at the market penetration of cryptocurrency, it's much lower than artificial intelligence. And cryptocurrency has been around a lot longer than artificial intelligence. So I don't get this. He suddenly changed his position that cryptocurrency, Bitcoin in particular, is a good thing. Okay. So Buffett, Jerome Powell, Jamie Dimon, what are U.S. stock buyers saying about market valuations? Okay, this was kind of interesting. Before the COVID situation in 2020, before the COVID pandemic, about 10% of stocks were being bought by retail buyers, through a retail brokerage. 10% of stocks before the pandemic were being purchased by retail buyers. Now it's jumped up to 35%. That's almost, that's a huge jump. That's more than a tripling. 35% of stocks are being bought by retail investors, and retail investors are ignoring issues about tariffs. It's just not a factor. They're still buying stocks at a relatively large percentage compared to before the pandemic. Also, this is very important. U.S. companies are making record buybacks. U.S. companies are buying back stocks. So this is pretty interesting. If the stock market is overvalued, generally speaking, companies would not buy back stocks, right? Right now, companies are making record buybacks of their stocks. Okay, so some people say, well, the stock market is high, but only in a narrow area. The thing is, if there's a correction, it affects the entire market, not just a narrow part. If there's a sell-off in the market, it would affect everything. So why wouldn't U.S. companies wait for a correction to buy back their stock? They're not. So retail investors are ignoring any tariff issues. U.S. companies are making record buybacks. Okay, so what does history say about the market valuation? You can compare artificial intelligence to the building of the railroads. In 1820 through the end of the century, through 1900, railroads really took off. That's a long time, 80 years, right? But the most intense period was from 1870 through 1900, but that's still 30 years. There was a lot of building of railroads, a lot of infrastructure to support railroads for 30 solid years. That's a long time. Railroads are similar to the AI build-out. There are knock-on economic effects. Okay, so for railroads, there were land issues, engineering issues, exploiting minerals. There were immigration issues, people coming from other countries, from Ireland, from China, to help build the railroads. There were changes to the travel industry because the West Coast and East Coast became connected. And so a lot of industries kind of took off because of the railroads. So they were building railroads, travel from the East Coast to the West Coast. And along the way, towns sprang up, companies sprang up, industries were increased in general. So artificial intelligence is having knock-on effects also. HVAC, water, power generation, data center build-out, really affecting the semiconductor industry, chip companies, companies that make chip building equipment. There are a lot of knock-on effects from artificial intelligence. So it's similar to the building of the railroads. I couldn't fit everything on the board here. So this is we're discussing the stock market. Is it in a bubble? What is a good move for the future? What might you consider doing? Okay, so I said this before. You should never take an all or nothing you should never have that kind of perspective with stocks. You shouldn't really have a black and white issue with investing. There are a couple things to remember. One, some smart people advise stay fully invested at all times in dollar cost average. And number two, if you decide that you feel some things are overvalued or they've attained a large valuation and made money for you, you can sell a portion incrementally of what you own. You don't have to dump everything. Just because Jamie Dimon thinks there's a 30% chance of a pullback. Buffett has raised his largest cash pile in history. He's been wrong before. He's been wrong on things, okay? That he lost billions of dollars in airline stocks in 2020. You can look that up. Just look on Buffett loses billions on airline stocks. So I put this first because of the Buffett indicator. But he is not, he's just a person, right? He has a lot of investing experience. He's raised a huge cash pile. That could be just for legacy to pass on to the new operator of Berkshire Hathaway to set him up so that he has options about where to invest. So, should you trust Buffett and just dump everything? No. You should not have a black and white all or nothing perspective on your investments. You can look up online, why should I stay fully invested in dollar cost average, right? So if you do decide to sell a portion of something you own that has attained a high valuation and you think how could it possibly go higher? Let me sell a portion of it. You could sell and invest that money in U.S. Treasuries, a very safe investment. And then what? Wait for the correction, right? When is the correction coming? How long are you going to be waiting? It's a very tough thing. So you could be waiting for a long time. You could stay fully invested and dollar cost average into investments so that over a long period of time, you never really find yourself out of the market. I mean, this is sort of out of the market, $330 billion in cash. So I think there's more to the story with Berkshire Hathaway than just, I think the stock market's overvalued, so I'm going to dump everything. I don't buy it. So Jamie Dimon, 30% chance of a pullback. So just keep that in mind. The black and white thinking, the all or nothing thinking, is probably not appropriate for investments because they do go up and down. There's never a straight up path. And you can say, I'm going to sell a portion of what I own that's become highly valued and invest that in treasuries. And then when the crash occurs, then I'll buy something else, as an idea. What you would buy, it's questionable. You could just buy the S&P 500. If there's a big correction and you have cash on the sidelines, you could say, I'm going to buy the S&P 500, an ETF, SPY is an example of such an ETF, and just let that money grow. So if you have any questions about this, please post questions in the comments. I'd be more than happy to answer any questions you have. I really want to thank everyone for watching. Have a great day.